Good morning and welcome this morning to Trading Futures, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined, well, there are the bells. That means the market, the cash market, is open. And it also means that I'm joined this morning since it's Tuesday. It's got to be Budapest. No, it's Tuesday, so it must be Michael Fairborn out there in the chat with me. Michael Fairborn, a 20-plus year veteran of the financial markets and a good friend. He's going to be there to help answer your questions along the way. It's going to be an interesting day. Welcome to April 1st. And for those of you who haven't already said it this morning, rabbit, rabbit, rabbit. But that being said, it is also Tariff Eve or Liberation Day Eve, depending on which side of the approach you take. We're going to talk a little bit about that this morning as we jump into this discussion. Now, a couple of quick housekeeping items as we get started here this morning. Remember, everything we talk about simply for illustrative and educational purposes only. It is not a recommendation. It is not any kind of advice. Remember that futures and futures options trading involves substantial risk. It is not suitable for all investors. Make sure that you read the risk disclosure statement for futures and options prior to trading any futures product or considering any futures strategy. Also, remember that futures trading requires separate authorization and it is leveraged and not suitable for all investors. Also, make sure that you understand the characteristics of futures margin, both initial margin and maintenance margin. We'll talk a little bit about those things as we go along today. Remember that, again, past performance not a guarantee of future success. We're going to talk about technical analysis this morning. Technical analysis is not the only way to look at the market. It is simply one way. It is theoretical. It is not a guarantee. Therefore, Schwab doesn't recommend the use of technical analysis or any other form of analysis as a sole means of investment research. Now, the other thing to think about is we're going to be using the Thinkorswim desktop software platform, specifically the Paper Money platform. It is not a guarantee of future success out there in the real world, and it may behave differently than a live trading account. So pay attention to some of those changes as you move your practice from paper trading to live trading. Be aware of those differences. Also, remember that stop orders, when we talk about those in the context of futures trades, behave a little bit differently. Now, normally, if we were talking about an equity, we would put in a stop order. It would issue then, once it's triggered, a market order. In this case, a stop order not guaranteed for execution price, and due to exchange rules on certain conditions, when that order is triggered, it substitutes an exchange-designated limit order instead of a market order, and that is a possibility that the order does not get filled if the price of the market moves quickly outside of that protection point range. So we'll talk about that as we get into this discussion, some of the characteristics of that and some of the ways that we can address that as we get into this discussion. So our general agenda today, we're going to look at futures contract classes. We're going to take a look at what's going on in the market right now. We're going to discuss some of the aspects of tariffs and their impact on the futures market. We're going to look at some example illustrative trades here. But the areas that I wanted to kind of focus on here this morning, primarily, as we get into this discussion, commodity futures and currency futures, because there's some movement going on in both of those, because they do tend to be, at least at this point, given the way that the tariffs seem to be shaking out ahead of the tariff imposition date, April 2nd, that these are going to be some of the areas where this is going to come home to roost. Now, I'm going to just say this at the very outset of this discussion. The way that we're going to approach this is not political. And whatever side of the aisle you fall on from a political standpoint, please keep that aside from this particular discussion. We're not going to take a political leaning one way or the other on futures and not going to comment on the political aspects of futures. We're going to simply look at this from the impact that those potential tariffs might have on specific markets. I just wanted to make sure that we have that idea in mind as we go into this discussion. And Michael Fairborn, I am sure, will be glad to remind anyone who happens to go down that road in the chat of that request to keep this apolitical and focused on the futures discussion. So let's do this. Let's shift over to the Thinkorswim desktop software platform this morning. We'll take a look at what's going on in the market. We'll jump into some discussions here pretty quickly. Now, we're taking a look first and foremost. By the way, this is a good reminder for me to remind you to do two things. One, follow us on X at Ben Watson CS, at Mike Fairborn CS. Two, click on that subscribe button down at the bottom of the page if you have not done so already. That's going to keep you connected to the Trader Talks webcast page. So we're looking now at the futures grid that I've built. The link to this grid, by the way, is in the description of this particular webcast, so that you can get this and have this for yourself. We're taking a look at the /ES. We're taking a look also at the /NQ and the /RTY. The big discussion here, or excuse me, these are the big contracts, right? These are the E-mini contracts, kind of that full-size contract, right? So taking a look at what's going on here, first of all, after kind of a crazy week in the cash market and as well in the futures market, seeing some downward pressure here, at least this morning, down about 0.40%, about 0.4%. What I'm also seeing, though, in the same time frame is a couple of things going on objectively, right? We've got a slightly, if we were to look at it here, a slightly higher low in that ES print, and a slightly higher, although maybe even a little bit more than slightly higher, move in the RSI. And that would suggest to me, from a technical analysis perspective, simply this, that the market is, at least at the moment, kind of digesting some of the factors that are creating this downdraft in the market. And there's maybe a little bit of stepping in on the part of dip buyers, stepping in at these lows. This low here, from candlestick perspective, and we just zoom in, this low right here, from a candlestick perspective, seems to be a push to the upside, more so than perhaps this kind of momentum candle, kind of bullish engulfing candle here. This is more of a power change type of candle where you get a push down to the low and then buyers step in and then push higher. The question is, what does today do and what does the follow-up look like? So I think from a bullish perspective, looking at this from that standpoint, saying, hey, this is holding that RSI line, meaning prices are closing closer to the highs on each one of these individual candles. That would suggest that maybe there's a little more bullishness. If this breaks this diagonal uptrend line on the RSI, and remember, RSI, any technical indicator, any oscillating indicator is going to lag a little bit. But if this breaks this trend line, that would suggest maybe a little bit more weakness coming in. So a failure here and a break of the RSI would suggest maybe a move back down towards this diagonal downtrend line, or excuse me, diagonal uptrend line, that's slight uptrend on those lows and a potential break or challenge of that level. But it has held support so far, and it's holding support there. What it's not doing, however, is breaking above kind of that near-term resistance. So we might call this an advanced block type of candle after this big turnaround candle yesterday, coming in at the end of the market, really kind of making that move. So what I want to do is jump in really quickly down to a shorter time frame. Let's take a look at a 5-day, 5-minute candle here. And we'll kind of zoom into this range over the last couple of days. So here's the overnight. Here's yesterday's cash market. Here's the overnight, relatively flat in that overnight time frame, but cash market making that move to the upside. So the question then becomes, if we zoom in even a little bit more, does this break down below this 56, we'll call it 56.20 support level, or does it break back up above kind of this resistance here, in this case about the 56.61, 56.62, or does it stay completely neutral? I mean, we've had some things, we've had PMI numbers today coming out, I think, here in a little bit, and so we're going to see some movement, but I think there may be a little bit of waiting for the next shoe to drop today, just given the fact that we're on the eve of the tariff impositions. But what I'm also noticing, just as we're watching this, is that this very short-term RSI. Now, remember, this is a 5-day, 5-minute, so these are 5-minute candles. We've got 2 5-minute candles going so far. We're not breaking to a new low, but the RSI is fading below that diagonal uptrend line, right? So that RSI fading may suggest a little bit of weakness coming back down into that support level. Let's jump over to the NASDAQ and see if we're seeing the same kind of thing. So here's on NASDAQ, which was weaker yesterday, depending on where we draw that line, right? We're kind of sitting right at that level. We had a lower low, we had a higher low on the RSI. So this might be, in this particular case, a little bit more of a bullish divergence, right? Lower low on price, higher low on the RSI might suggest some buying stepped in, right? Okay. And same thing on the Russell 2000. Russell 2000 roughly making equal lows. If we were to draw low to low here on the RSI, depending on, again, on where we draw that, if we just take today's print where it is currently as kind of the line, a little bit of a bullish divergence starting to perhaps kind of get a little bit of bounce there. But that being said, let's pop into the 5-day, 5-minute and see what's going on. So now as we've opened up the day, a push to the downside into that previous low from yesterday, but a little bit of a reversal on the RSI. So some stepping back in. That might be in the Russell 2000, an initial kind of impulse move to the upside. So let's do this. While that is seeming to be moving to the upside, and while it seems like the iron might be hot there, let's do this. Let's switch over to our future movers grid, which is on the left-hand side, a 1-year daily chart. On the right-hand side, today's movement on a 5-minute basis. And let's go to /M2K, which we've looked at before. This is the Russell 2000 micro futures. So let's look at our contract size here. I'm just going to maximize this sell really quickly here. Tick size is 0.1, tick value 50 cents, point value $5, risk in one contract or notional value in the contract $10,068 as opposed to /RTY, which is the large contract. You can see that it is 10 times that $5 point value or $5 tick value, $50 point value, 100,705 on the notional. So we'll do /M2K. Doesn't seem to be, at least from the perspective that we've seen, a lot of liquidity difference between the micro and the E-mini. But let's pop back into our side-by-side grid. And you've got this also in this future movers grid is also in the description of the webcast. So you can come back and look at that. But starting to see over here on the right-hand side, that little bit of a bounce. And we've got now, once this candle closes, if we get a close above the high of that low day, right? If this is a pullback and we're starting to see that upward move, and this does not become a bear flag, we're seeing a little bit of negative momentum here. So from a bullish perspective, looking and taking this from a bullish trade, looking perhaps to cross the apex of this move right here. Now it did it intra candle, because remember these are 5-minute candles, but looking potentially for a cross of that level right there, a close above or a move above the high of that low day. This is our low, or our low candle. This is our low candle so far, is this one right here, that 735 candle. So looking for a cross there. We don't have it yet, but we're going to put this trade together as if just in that expectation. So it looks like we're closing a little bit lower. Looks like momentum is fading just a little bit here. We'll see if that's the case, but we're going to look at this for a bullish reversal trade here for a move back up here to this 2024 01 level. I'm going to draw that line in here so that we can see where that move is. And we'll see if we can get this trade put together really quick. And our point at which we're going to exit this trade if it goes against us is going to be off of that low in this particular case. So we're just about balanced reward to risk here. And there's our move a little bit higher here. So we're going to put this trade on, and what we're going to do is right-click and buy custom with OCO bracket. Now, one thing to remember with an OCO bracket order in this particular case is if the market moves quickly and those trigger points, especially the stop, gets worked as an exchange mandated and exchange driven limit order, there is the potential that one side could fill before the other cancels if the market moves very quickly, if we get a quick bounce. and that both sides of this OCO bracket could potentially fill. That's a very low probability, but it is potentially a scenario. So we're going to look for a move above that 214. We're going to make that a buy stop. And again, we're going to make this, in this particular case, a buy stop limit. Now, our candle didn't close there, so we're still looking for a close above the high of that candle. Our next candle is a little bit higher and starting to turn green. So we're going to do this as a buy stop. We're going to change our order type to buy stop. Now, normally that would be a buy stop market, right? And we would buy at the next available price. But again, remember, this is a futures contract, so we're talking about a buy stop that becomes an exchange-driven limit order. Now, we could create a limit order as well by doing a stop limit, and we could say, fine, I want to buy stop above 214. It's at 212.16 now, and I want to work that limit order at a buy stop limit of 214. We'll call it 214.50, just for the sake of this trade. So we'll make the limit 214.50 on that limit. So what I've got to do is I've got to change those two around, because that's 214 as our stop trigger. And then our next level here is our 214.50. We're going to make that good till, or excuse me, we're going to make that a day order, because we expect this to be triggered in this day. If it doesn't, the whole situation potentially changes. Our limit order to exit the trade is above 224. So we're going to make that limit order here in this particular case 2024, excuse me. And we're going to keep that as a limit order, which says, hey, don't do anything until we can sell this for 2024 or better. And we're going to make our stop exit here 2004. And we're going to make that a stop 2004. And we're going to let that work as an exchange driven. Now, we could put a limit order in there as well, instead of a stop market. Remember, that stop market's going to get worked as an exchange driven and exchange mandated limit order. So we could make that a stop as well, or a stop limit as well. In fact, let's do that just so that we can talk a little bit about that. Not a limit order. We're going to make that a stop limit order here in this case. And our stop trigger is at 2004. And our limit's going to be at 2,375. We'll make that limit 2,375. So giving it about a 25-cent move. So we're going to click on confirm and send, read through this order, recognizing our transaction costs that are exchange mandated transaction costs, and our buying power impact in this particular case, that initial margin, in this case for that one contract, 829. We're going to go ahead and put this in our futures group and click on send, and we'll fire that order off. And we're now above that 214.50, 214.90. So we're kind of above that limit price, right? So that's the potential risk in putting this on as a buy stop limit, is that the market moves. Now, what we might have happen here is if this pulls back. And so this is the risk. And the reason that I wanted to address this particular case, right, is this is a scenario where we might miss out on the trade because of that either the exchange designated limit or our self-imposed limit on that buy stop, right? Because now we're a couple of points above, and it seems as if we've missed out on that trade. Now, we could rework the trade. I kind of did that on purpose and kind of talked through it just to show that potential, right? So Ricebird asks a great question. You know, I mean, a lot of these trades that we take are typically daily trades. We're looking at getting into the trade, and we're looking at getting out of the trade on a relatively quick basis, right? And there's a couple of reasons for that. One is that when we're doing this, we're talking about now the initial margin. Once the position is on, then we have maintenance margin. But if we're taking the trade and we're getting out of the trade in that same trading day without having to go through that mark to market scenario, right, where at the end of the day this position is marked to the current market, then we're minimizing the potential impact of having to keep that that maintenance margin going. So that's something that we've got to pay attention to, right? So yes, you can trend trade futures contracts, but you've got to be aware of the impact of maintenance margin and how that potentially changes. Now, we can, high speed, use the futures trader link. If we go to the trade tab and we go to the futures trader link here, essentially what that does is it sets up, this is a nice view, right? And if we were going to take this back, say for instance, to, kind of that one view right here, or the two view right here, if we go to this and we put in our symbol /ES, this makes it nice to be able to kind of have that that view of how this looks, right? We can see the chart, we can see the order. Sometimes it presents a little bit too much information, and generally, right? I like to see both the chart as well as and we can set this up the way that we want to. I mean, this becomes now part of that active trader. And we've talked a little bit about using the active trader. I know there are some challenges in terms of the way that the active trader tool looks and behaves now as you change sizes and open up the groups here. We're going to talk about this in a future class, but for today, we're going to stick with our futures grid in terms of putting those trades together. Okay. All right. So looks like we may have potentially missed that particular trade. The others that I wanted to look at really quickly here, and again, getting back to some of the tariff discussions, right? So I started thinking this morning, well, wait, what's going to happen potentially if those tariffs are imposed on perhaps the more liquid of the currencies that might be impacted by these tariffs? So a majority of the tariffs are going to be imposed on Canada and Mexico. Arguably, the Canadian dollar is a little bit more liquid of currency, or at least a little bit larger in terms of that size. So I'm going to look at /6C, which is the Canadian dollar futures contract. So we're not looking at the spot currency. We're not looking at the currency pair. This is the futures contract for the currency. So the idea being that generally, and there are, so many different economic models when it comes to what the impact of futures to tariffs are on currencies and on prices and everything else. But generally, if tariffs are imposed and those tariffs are enforced, that could cut back Canadian exports. And if those Canadian exports are cut back, that could force the Bank of Canada into making rate cuts. But the initial impact is generally pressure on the Canadian dollar. And we've kind of seen that, right? So you look since November, October, when tariffs were initially proposed, you started to see some pretty significant downward pressure on the Canadian dollar. Now, since there's kind of been this pause, kind of wait and see, will they, won't they, and waiting to see what the impact is, the Canadian dollar's kind of been oscillating back and forth, right? We've seen it move down to this low. We've seen it rally back up. It's pulled back. It's rallied back up. Seems to be kind of running into this resistance and maybe kind of breaking down from this resistance level here, maybe that kind of diagonal downtrend line, kind of this diagonal uptrend line, kind of seeing a little bit of a symmetrical triangle squeeze. Now we go over to the right-hand side, to the 5-day, 5-minute chart. And I'm going to make this one a little bit bigger just so that we can see it. So I'll maximize this cell and we can see what we're looking at here. We've got a little bit of a resistance level, maybe right in this 0.697 range, and a bit of a bear flag type of potential. So the way that I'm going to put this trade together on the Canadian dollar is that move right here, that resistance there being the exit point, and our potential target to the downside, maybe down here, maybe a little bit further than that. But that's kind of what's setting itself up here for this bear flag type of move on the Canadian dollar. Now, because I want to get into this trade here in this particular case in this downward direction, I'm looking for again, a candle close below this area. If I were looking for this to be really kind of that, full on, this would be a blowed close below the high of, or the low of the high day, right? Or the high candle. There's my high candle. And so I'd be looking for a move down to this point. But I'm going to look to try to capture the move from this resistance level down to this support. Short-term trade, quick move to the downside in this particular case, right? So that's the scenario in this trade. And again, this is not a recommendation by any means. This is simply an illustrative example of what those potential impacts might be on tariffs. So I'm going to bring this back in here. We're going to take this trade and we're going to look at exiting. If this goes up, I'm actually going to bring that down a little bit, that expectation, down to about this 6972 range, kind of that resistance right there. And we're going to look at exiting if it goes down to 6963. There goes our M2K trade. So what it looks like happened is it probably rallied and then pulled back and we got filled. We'll see which direction it goes. Now we're going to look at getting into this trade. So I'm going to create a trade. I'm not going to do a buy stop here in this particular case. I'm just going to simply, or a sell stop. I'm just going to do a sell custom with OCO bracket. And we're going to put in our numbers here. 0.6972 on the upside. So that's going to be our limit price if this goes, or our stop price if this goes down. So we're going to say, all right, fine. So if this goes down, we're going to look at getting out at 6963, 0.6963. And we'll put that in place. And then our whoops, that's our stop. Sorry, I'm going the other direction. So let's do this. Let's put our 6963 in our limit. This is always a good idea to remember to kind of think through what your trade is expected to do. 6963. And we're expecting that if it goes up, we're going to exit at 6972. So we'll put that in here, 0.6692. This is also a good reason to, when you hit confirm and send, read through the order to make sure that you know what that order is going to do. So we're going to sell it at 6967, which is right about where it is now. Buy it back if it goes to 6963, which is our limit on the downside. And then buy it back if it goes to 6972, goes against us to the upside. Again, there's our exchange driven. Our buying power impact is a little bit larger because this is the bigger contract. And that means our initial margin is going to be a little bit higher. So we're going to click on futures because the contract size, that notional value is a little bit larger. We're going to click on futures, put in that group. We're going to click on send, and we're going to fire that order off. And what we may need to do is bump that a little bit because it started to move. There we go. We got it 69675. And our expectation is a move, quick move to the downside, right? Yeah, James asks a great question here, right? The market usually prices in expected future events. The problem is, in this particular case, we don't know what the future event is, right? We know that there's a potential for tariffs. We don't know if there's actually going to be an imposition of those tariffs. And we don't know the exact amounts and what their definite impacts. I mean, that's the same thing, right? We don't know what an earnings announcement is going to do. We don't know what a jobs report number is going to do. So there is always uncertainty, but at the same time, that uncertainty in this particular case, I think, is bringing a little bit of volatility, certainly, but there's some relationships that generally we can expect might hold up. So we're going to look at that move to the downside, right? All right. So let's look at another commodities space here. So this is the currency space. And we got stopped. We got stopped out of that trade, which is fine. There's nothing wrong with that in terms of getting stopped out. It went against us in this particular case. Yeah, so John asks a great question. If that price doesn't get to either one of those, could we leave it on through the end of the day through that mark to market? And the answer is yes, you could. But in this particular case, generally we won't, right? Yeah, there is a lot of speculation, right? But John, to go back to your question, you certainly could leave that, let that trade on. But again, this is an area where attention must be paid. And if that's the case, one thing to remember, because we created those orders as day orders, would be to change the time in force on the orders so that it reflects that longer time frame. Otherwise, you don't have the purported protection, and I say protection loosely here in this case, but you don't have the purported protection of the stop or the limit order. You'd have to go in and recreate those orders to have that protection in place. So that's something to pay attention to if you're going to hold that trade on over that 1 day time frame, over that daily time frame. Now, the other one that I wanted to take a look at is copper, which copper is also an area. We're going to look at MHG, which is the micro copper contract. And you can see that copper futures are dropping. They've been rallying significantly, right? Copper futures making this bear flag move. And we're kind of at the extent of that bear flag move. So I want to see, in order to get into that particular trade, I want to see a little bit of a rally and then a move lower. I think this kind of, if we were to look at this kind of measured move on this bear flag rally, or excuse me, bear flag move to the downside, if I duplicate that move and I put it right back here, it's kind of there, right? It's kind of made most of that move almost. It's not quite at the end of that move, but maybe not enough to potentially take that and take it a little bit further to the downside here, unless maybe we get a break below a support level. So the other one that I was looking at in this particular case was /SIL, which is the silver futures contract. This is the smaller silver futures contract. And I want to maximize this again here really quickly so that we can see the notional value, right? So this tick size is 0.005. Tick value is $5. Point value is $1,000. So our notional in this particular case, 34,570. If we look at /SI, now you see the larger notional, right? Tick size is the same. Tick value, 25. Point value is $5,000. So this is a 10. The SIL is a tenth. And the risk or the notional in this contract, 172,450. But they move the same generally. So we're going to do /SIL and silver, right? So let's move this back over. You can see generally that uptrend, but breaking below this support level on this 5 day or on this today 5-minute chart. So breaking below that support level, maybe looking for a move lower here. I'm going to zoom in a little bit more so that we can see potentially where there might be a support level that this moves down to. And it might be down around this 34. I'm going to call it 34 even. We'll call it 34 even, just right to that support where this has made that move before. So we're going to look at entering this trade on this downside move. You can see that we've got stronger downside momentum. So where's our exit going to be? Our exit's going to be back up above maybe this resistance level, the 34. We'll draw that in, 34.58. Right there. And our exit target is going to be at 34 even if it's going in our direction. So right click, sell custom. Sell custom with OCO bracket. Again, the considerations that we were going to pay attention to here are still the considerations. So we're looking for it to go down to 34 even. And we're looking for it, if it goes against us, we said our resistance level here was at 34.58. So that's going to be our stop, 34.58. And again, that's going to trigger an exchange-driven market or a limit order. And our entry is going to be right about here where it is. We're going to open that up so that we see where it is, 34.25, or excuse me, 34.51. And we're going to keep that right about there. Click on confirm and send, read through the order, make sure that's what we want it to do. Exchange mandated transaction costs, and we'll put this in our futures contract. We'll go ahead and click on send. And remember that those stop orders that we put in there and those limit orders are not a guarantee. So we're short Now, the silver contract looking for that short-term move to the downside. All right. All right. So now, now that we've got those three trades on, let's pop back over here to our monitor tab and let's take a look at what we've got going on. So here's our M2K trade. There's our Canadian dollar trade, which we got stopped out of. And by the way, our silver trade's working in our favor, but our gold contract trade, where we are short that gold contract at the moment, which I inadvertently left on, which now no longer has a stop protection on it. Right. Again, I say that protection from the standpoint of full understanding that a stop order in a futures contract is a little bit different and could be not filled at all. But I left accidentally from our last week's discussion this /MGC contract on, and that's working in our favor so far. Let's take a look really quickly here. Let's go to our grid and bring up /MGC. This is gold, and we can see that gold had been working for us, right? We saw that little bit of a move to the downside. It was working against us because we've had some strong days to the upside. But this might be one that we maybe take off of the trade here if, in fact, it moves back up above this 31.67 level, right? 31.67 being kind of a pretty strong resistance here on this 5-minute chart. So let's come back over here to this contract, right-click, and there we go. Our silver trade went against us. Okay, well, that happens too, right? So we're planning for that. So now here's what we're going to look for is we're going to look for an exit on this gold trade. Go back to our chart really quickly, 31.67.70, and we'll bring back up our trade here. 31.67 is where we're going to close this out if it goes against this 31.67. Let's just make sure something here real quick. Hang on. I'm going to delete this order. I want to come back over here to our monitor tab. I misread this. So we are long that gold. We are long that gold contract, and that is working in our favor here. I thought we were short the gold contract. So we're going to leave that in place, but we're going to put on the other side, this changes perspective. And again, guys, this is the importance of reading your orders. We're going to put a stop order in here at 31.52.70 down at the bottom, right? So we're going to make this we're going to go back over to the monitor tab, 31.52.70. I'm glad I caught that. Right click, create closing order. We're going to sell it if we stop at 31.52, right? 31.52.70. Yep, 31.52.70 is where we said we were going to put that. All right, so go back over here to the monitor tab. We'll bring up our order, 31.52.70. Is our exit in this place. So we're going to make that in this case good till canceled. So if this does take longer, and that's going to be our exit if this continues to go against us or does go against us in this particular case. Right now, you're right, Martin. We could sell a futures option against that. We're not going to get into that yet. We're going to do those. We're going to start getting into futures options on futures in a later class. But I want to put this order in place, recognizing that that is going to be, hey, and our R2K trade went in our favor, and that is closed down. So I'm going to put this order on. We're going to put this in our futures group. That's going to be an exit order, again, recognizing any alerts that might be here. We're going to put that order on, and that's going to be in that particular case. So that filled for us, and so we are out of that trade. So there we go. All right, Carol, thank you for bringing that news into the discussion here. So one of the other things that I wanted to look at here really quickly is popping back to our charts. And I want to go to our kind of single grid here and look really quickly kind of around the space and see what's going on. And again, remember, one of the things that you can do And one of the great things about futures contracts is they can be used as kind of that that measure of what the market is doing. We're going to go to the futures tab here under that drop-down box, and you can see all the futures contracts that you can take a look at. So I want to kind of go through a couple of these really quickly to end this up and talk about what's happening today as we set up for this kind of eve of the tariffs. And we can see that interest rates are dropping. This is the /10Y as a measure of that market. This is the interest rate, meaning if this is going down, that means bond prices are going up. So if we were to look at /ZN, which is the 10-year bond price, you can see the opposite, right? You can see that the bond price is going up, meaning bonds are being bought. That may be an indication that there's a safe haven, right? Let's go back to our futures drop down, and let's take a look at a couple of these others. There's our Canadian dollar futures that we were looking at before. Let's take a look at Japanese yen futures, kind of holding this support level here in a neutral movement. Let's look at the Mexican peso futures, and Mexican peso futures pushing to the downside like we were talking about with the Canadian dollar. Let's take a look also at crude oil and see what crude oil is doing here. We saw crude oil come down to the bottom of that support level again, start to bounce. It's making a little bit of a move, maybe running into a bit of a resistance here as there is uncertainty about what's going on demand-wise, number one, with tariffs being imposed, and two, potential sanctions or further sanctions against Russian oil, creating some uncertainty, and uncertainty tends to be bullish in the short term for crude oil. Somebody asked me the question the other day, do we only look at crude oil or West Texas crude, which is the /CL, or do we ever look at Brent crude? And you can see here's the Brent crude futures /BZ, and it's doing roughly the same thing. I just don't have the Fibonacci charts on here. Those do tend generally to move similar to one another. So let's take a look at, say, for instance, gold futures. We looked at gold continuing to move higher. Let's take a look also at the heating oil futures. We've talked about heating oil as kind of the proxy for distillates, whether it's diesel fuel, whether it's jet fuel. And a lot of this demand for heating oil tends to come from the airline industry. Airlines getting a bit of a downgrade today, so starting to see a little bit of a move, or at least a bit of some resistance here on heating oil as demand may be lower. I always do this one for James Boyd. Lean hog futures kind of going sideways, maybe squeezing down the chute there into that little symmetrical triangle. And also live cattle futures. If you've been in the grocery store recently, you know the beef prices have been moving higher. Live cattle futures generally moving a little bit to the upside. And let's take a look at a couple of others here really quickly. I want to do this really quickly and take a look at, now, I'm going to just say this again, this is important to pay attention to. And it's in the disclosures, but we're going to look at Bitcoin futures, and we're going to see what Bitcoin futures are doing. Now, when we talk about cryptocurrency futures, remember that cryptocurrency futures have a lot of other influences, right? And it is something that you need to pay attention to and be aware of the notifications about those cryptocurrency futures and the characteristics and risks of those cryptocurrency futures. The reason I'm doing this at the end is so that if we need to cut this, we can cut this out. But that being said, we can see that cryptocurrency futures kind of sitting right here at a support level, little bit of weakness coming into this particular case in the Bitcoin futures, some resistance overhead around the 91,815 mark, and breaking to the upside a little bit on the RSI, so gaining a little bit of strength here. Now, with all of that said, guys, if you want to learn a little bit more about about trading futures, one of the things that you can do is you can join us for our in-person events. Go to schwab.com/coaching, then go to the live or the in-person events section coming up in Dallas in April. We've got an advanced option strategies workshop that also contains an introduction to futures section. Coming up in Anaheim at the end of May, we've got another one that's also going to include some futures content there as well. And then coming up next weekend after next, The 11th and 12th of April, we're going to be in Detroit talking about technical analysis and option strategies. Guys, thanks for joining me. If you want to learn more, check out the Trader Talks webcast page. My thanks, of course, to my good friend Mike Fairborn helping out today. And remember to click on subscribe and like. Thanks again, everyone. And my great thanks to our production staff for helping us keep things going today. Have a great day, everybody. Take care. Bye-bye.